Welcome to Investments. I'm Professor Anshan Yang. Today we'll discuss Chapter 17, Macroeconomic and Industry Analysis. We will focus on Section 17.1 on global economy and Section 17.2 on domestic macroeconomy. We will also do some concept check for practice. At the end of our session, we will do summary for review. Before we begin, you might be interested in asking yourself a few questions. What is an economy? Should I be concerned about global economy? Should I also be concerned about domestic macroeconomy? If you're interested in investing in some knowledge on economy, how about let's start with the basics of a macroeconomic analysis. First of all, what is an economy? Well, economy is based on market demand and supply, where producers and consumers reach an equilibrium point to maintain the well-functioning of the economic development. Both producers and consumers will also shift their supply and demand according to preferences toward costs, time, and value. And that is what we call the value function, utility function. Okay? Therefore, in various market conditions, including expansion economy, normal economy, and recession economy, producers and consumers will face different decision making to meet their own preferences. For example, in competitive advantage perspective, companies will compete with each other to produce goods and services. Companies represent market supply, and consumers represent market demand. When market supply is greater than market demand, prices decline. But when market demand is greater than market supply, prices increase. Therefore, companies and consumers will constantly shift their choices according to market condition or economic development. Second, should I be concerned about global economy? Yes. Most countries nowadays are open economy with frequent international trade, where import and export of goods and services are vital to domestic economic development. Global economy may also have a contagion effect, where important decision-making or event in one country may positively or negatively influence other countries, such as financial crisis or the decision to withdraw from the European Union. However, if one country chooses to remain as a closed economy, where domestic production of goods and services are self-sufficient and entirely self-supplied and consumed, global economy may not show a high influence. Therefore, global economy affects our investment decisions in terms of exchange rates and changes in purchasing power. We take further the example of competitive advantage for countries. Country A may specialize in producing wine and trade with country B, which specializes in producing cotton. Each country will participate in specialized production rather than diversified production to gain the best competitive advantage. Third, should I also be concerned about domestic macroeconomy? Yes, definitely. Domestic economic development affects one's capability in maintaining the desired standard of living. Domestic economic development affects our salary level, employment opportunities available, prices of goods and services, cost of debt, etc. Even if you only have a bank account in your entire life and do not participate in financial market, you're still a part of the domestic economy because your labor input and monetary consumption will all count as a part of national statistics for government budget planning and business enterprise development. Therefore, domestic economy affects our investment decision, affects employment, inflation, gross domestic product, industry production, interest rates, budget deficit, and sentiment. Okay, how confident we are about our own economy in the near future or in the far future. For sentiment, if the general public, including business and consumers, believe future economic development may be slowing down, the sentiment is likely to be pessimistic. Contrarily, if the general public believes future economic development will prosper and grow, the sentiment is likely to be optimistic. Different countries will use various signals to show public sentiment toward economic development. In Taiwan, sentiment toward economic development on a monthly basis is expressed through blue light for sluggish economic development estimation, green light for stable economic development estimation, and red light for booming economic development estimation. Now, let's take a look at slide 17-1. Right, so let's take a look at 17-1 for the slide. Okay, so here in the fundamental analysis, a firm's intrinsic value will come from earnings prospect. That will be determined by the economic environment, of course, okay, depending on the economic condition, whether it is in expansion, in normal, or in recession, and the outside environment on the industry in which the firm operates. For example, the competitive environment, who are the competitors and who are the alliances? How does a firm compete or cooperate with the environment? And the firm's position within the industry. In the industry, we have the upstream, downstream, and also we have the liaison. All right? So depending on the firm's position, if the firm is big enough, the firm might be able to cover all different positions in the industry. But if the firm is a newly startup, might be only be strategically positioned in one of the very unique places. Right? So that's for the fundamental analysis for a firm. Okay? And for the global economy, okay, we want to know whether the global economy, how is it going to affect a firm? Okay? In terms of the export prospects, like we mentioned, international trade is becoming very important. So export is inevitable and it is also necessary for firms to grow. Okay? Whether they want to merge or acquire other firms, or whether they want to grow or expand, exporting is actually necessary. And price competition from competitors. This will be something that we see quite often nowadays, okay, with the price discounts for certain products. Now, in the beginning, the price competition might be okay, but later, the product itself or the service itself will become a commodity. Then no longer how much the price cut or price competition is going on, the profit won't be growing. Okay, so price competition might work only in the short term, but in the long term, price competition may become ineffective. And profits on investments aboard, definitely. Okay, because firms are constantly looking for a lower production site with cheaper labor, less production cost. Okay, including labor, plant, production, raw material, taxes, land acquisition, inventory, warehouse, etc. Okay, so profits on investments aboard. Okay, how can we earn or how can we compete on a global basis? Right. So for the economic performance, let's take a look. In 2002, according to stock market return, how does the trade take up or account for the stock market return? Let's take a look. Okay, Brazil, China, India, and Russia. Okay, we see that with the returns. Okay, for the stock market return, we have in local currency and also in U.S. dollar. Right. So we have 10.2 for Brazil. China will be 3.1, India 27.6, and Russia will be 3.7. And if we convert it in terms of US dollar, that will be 0.8, 4.2, 26.7, and 10.5. So with the forecasted growth in GDP, okay, we also have them highlighted. That would be the highest for China, followed by India, 6.5, and then Russia, 3.7, and Brazil, 3.5. Okay? Now, the reason for us to highlight these countries is because they're the so-called BRICS countries, which we take the first letter, okay, in abbreviation. Okay, so Brazil, Russia, India, China, and South Africa. Right, so they're grouped together because of rapid recent development, and with large expected to continue for that performance. Okay, so this is how economic performance is going to affect the stock market return, and that will have a very strong impact. Okay, and then let's take a look at Greece. Okay, Greece in local currency 38.3, and also in US dollar 41.1. But the forecasted growth in GDP will be negative 5.0, right? Okay. So because of the recent event, okay, the Greek economy is expected to continue its painful contraction. All right. Now, how about for Germany? Okay, local currency at 31.9%, and in US dollar that will be 34.5%, and the forecasted growth in GDP will be 0.7. So the Germany is expected to show positive and modest growth. All right. So economic performance is actually quite vital and quite critical to the stock market return. So that's why, as an investor, we must pay special attention and close attention to the economic development in order for us to make the most appropriate investment decision. Okay. So for the global economy, let's take a look. How about exchange rates? Okay, like we mentioned before. Since international trade and export are critically important, exchange rate is the rate which domestic currency can be converted into foreign currency. And the obvious factor is that it will affect international competitiveness of a country's industry, definitely, okay, in terms of import and export, right? So the ratio of purchasing power is called the real or inflation adjusted exchange rate. And the positive value will mean the dollar has gained purchasing power relative to other currency, and a negative number will indicate a depreciating dollar. Right? So depending on the appreciation or depreciation of the currency, consumers' purchasing power will change accordingly. Right?